Okay, Brother Will. Um, just giving you a little bit of updates here. The X trade, man, was that a nail biter? But I came out ahead, basically a little bit over break even. That was a nail biting trade. It came in at 11 cents, and I wasn't going to hold it till January. Um, some of these are other free trades. The one I'm kind of looking at getting out here soon is XSP. Um, but let's look at markets, see where the markets are at. SPX should be up 6 points. Oh, it's up 32. Okay. E-mini S&P. Okay, VIX. VIX is, I mean, that one trade, the VIX trade is a dead trade, so I'm not gonna even care about that. That's just a dead trade. So the VIX, unless something happens drastically in the next week and a half, I'm not going to consider that trade even valid. XSP, we're going to get out of that. You know what? Let's close that now. That was the calendar trade that I didn't want to stay in this long, but we're going to get out of that. See if we can get out of that a little bit over break even, 20-cent profit. We'll see if we can do that. 20-cent profit. And we'll analyze what will happen if we stayed in that trade. Okay, we're out. All right. But okay, so we made 20 cents, which is basically 50%. Okay. The cost of 51 cents, we made 26 cents. Okay. So we made about 50% on that. So that's done. XLF. Okay, no, we're going to stay in that for a while. That's one of them longer ones. The weed stocks, yeah, I don't care about those. Those were throwing money, slinging mud at a wall. So it wasn't like I really cared about that. ARK and TLT, we're going to try to find some other trades. Okay, this Intel is the one that I'm really, because our deltas are getting a little out of hand on this. We're long deltas, so this thing must have been falling. Without a doubt, this thing's been falling. So we're long deltas. So I want to bring this 26 in. And then we'll look at let's look at the cost of money real quick. Cost of money. Cost of money is flat. So basically we got, flat. I mean, this quote unquote Santa Claus rally, I'm not going to say you're not going to. Chances are you won't see it under this lame duck by the name of Joe Biden. He's out of there. So let's move that 26 down. World strikes down. If we wanted to move that 26 down, okay, to the 17 delta, 26 delta, which is a 52% chance this thing will get hit. That gives us 33 cents of credit. 33 cents of credit. Let's see, let's analyze this. And if that went down to there, if we move that to the 22.5, Intel has a chance of moving. Because yesterday it got slammed. Intel got destroyed yesterday. And then we'll look at some new trades. And then, like I say, I like to make this very quick. Okay, come on, Tasty. Give me some data. Might be just a computer. But I want to see a chart of Intel. All right, Tasty. Come on. All right. Until we get some data, I don't know if it's probably a server issue. Let's see. Let's go and look for some new trades. Okay, IV ranks. XLU, look at the IV indexes are very low, and I don't like that. The only one that I can deal with is FXI. It's still underneath 30, 41, so it's, And these are just the ETFs. So that's the only one I could really see. SLV and FXI. I tried SLV yesterday, and that didn't materialize. But that's the only one I could actually see in terms of these liquid ETFs. Uh, let's go to activity, all orders, uh, the ones that didn't get filled yesterday. Okay, FXI didn't get filled yesterday. I'll tell you what happened on that X. Let's see where FXI. Okay, I was looking for 83 cents, and it's down to 70. So yeah, so it moved away from our zone. Let's go to SLV and see if there's, because I was trying to get into that yesterday. Both of those, I had two trades I was trying to get into yesterday. FXI, SLV, that was the other one. Let's see what I was doing there. What was I doing there? Was it a butterfly? Okay. Oops, let's try that again. SLV. Here we go. Yeah, no, that was a strangle. I was trying to get it for, okay, so it gives us a little bit of, so we can possibly get back into this. At a 292, I'm gonna try to go on the upper side of the range, only because it's still underneath my third that I want. But you've got $12 a gamma, so so the curve is really, this thing can move on you. The curve is really, really steep on their gamma, because if it goes to the upside, you're down quite a bit. If it goes to the downside, you're down quite a bit to your short strikes. That's just the gamma, but 85% chance you're going to make 52% on this. Okay, so we got that trade on. Let's go to the table and your standard deviation. So we're just inside the standard deviation. On the upside, we're outside of the standard deviation. So, I mean, it's pretty delta neutral. It's just that there's a little bit more skew to the upside. There's a little bit, but there should be enough liquid. No, there's not enough liquidity on my strikes. If I went down to, to around the standard deviation, it should be a little more liquidity, but I don't want to get down there. Anyways, let's see if we have a chart yet. Wonder what's up with. Sometimes that happens on that I notice, and it might be on my end just because I have a lot happening, but should be able to get a chart. Maybe it's just the memory, because I want to see a chart of that Intel, because I do want to move those strikes, but not at 14 cents. It's not worth it to move a strike on Intel for 14 cents, and I don't want to put it into the. I mean, our deltas are definitely getting a little bit strained on this, on Intel. Roll strikes down. Yeah, so if I rolled it down to 17 deltas, we're only getting 13 cents for this. If I roll it down here, that means there's a 52% chance that this thing is gonna you know what? If I'm gonna do that, I want to get paid for it. So I'm gonna go on the upper end, which is around 34. Let's go 35. So if that market goes up a little bit, then that should fill that. The only thing is we're really, really straining where these, where our, this is something I don't think I would like to hold much longer. 37 days, okay. So if anything, we're going to get paid for staying in there. But I wanted to see a chart on this. Problem is, why am I not getting any charts? I'm going to exit the platform and see if I can get a chart. Therefore, and then we'll get back into it, see if we can get a chart on this. Because that doesn't make for good trading when you can't and you can't pull up a chart. So let me close some other windows and see if that's what it is. Maybe I got some other windows that are taking up the memory. What's funny is I just watched a wild movie called Heretic. Very, very wild. Hugh Grant. Interesting movie. I'm trying to watch this other one called Conclave. Okay, now let's see if we can get a chart up. But anyways, that X trade, I want to show you how that worked out. Man, was that a nail biter trade? The SMCI trade, I'm so glad that I got out of that, because that would have been just, I'd have to invert strangles, and as they say in Tasty, buy the guts, sell the wings. I would have had to do a lot of fixing, because that was a pure train wreck. It was just the nature. I still think that stock is gonna disappear, because anytime you have somebody talk about delisting, and they were saying that earlier when I had that trade. So let's see. Okay, let's see where we're at and try to get back in. Try to get back in on this. Where that trade is going to be. And see if Tasty will give us a chart. And I close some windows. Okay, looks like we got some charts happening. Let's go to Intel. Let's see if we have a chart. Oh, did it roll? I don't think it rolled, did it? Let's go to a chart. Okay, maybe it did roll. Looks like it rolled. Okay. But anyways, yeah, I'm trying to see exactly where our okay, yeah, because earnings we're after earnings. So yeah, so I rolled it in. Okay, so I rolled it into the 22.5. So we got a really, really narrow profit target to stay in between the 19 and the 22.5. Our deltas are a little more even, a lot more even. We're delta neutral now. So, we're just going to stick around in Intel and see what happens. But that yesterday, when Intel dropped like crazy, so we did get our 35 cents in this. And, so the trade price is at 114. So we'll see what happens, just to stick around. The thing about Intel, because of the last few days, that thing has the ability to move $2 either way. It could easily move $2. So that's why I'm kind of like really, really sitting on this. Implied volatility is down. It is coming down on the ATR, but it's still, if it can move $2 either way, that'll definitely put us in a lot of strains. So this is a trade that I'm really more than likely going to close. 53 cents, 90 cents. This is more prone to closing than to staying in, because there's not much room to move anymore. And I don't like trying to fix a broken car. So, but that X trade, man, my goodness. I'll show you what happened on that. That one was definitely worth it in terms of getting out the way I got out. X. Okay. Let's go to the activity. But anyways, give you some idea of this, how it worked. And it worked out great. Yesterday, I got a Hail Mary pass. The Tasty Works gave me a Hail Mary pass on that. Volatility came in like crazy. As X started falling, market started falling like crazy yesterday. It just literally, like, at the very end, just kind of collapsed. If you see that, X literally collapsed. When it did that, I was in the money, and in a bad way. And then it bounced back like toward the end of the day, it just started bouncing back, but volatility just went out of the very, very end. It just kind of like went out and gave me a Hail Mary pass to get out of this trade. But anyways, yeah, we sold it 244. Then got a 244 credit. That's 277 credit. 328 credit. 390. Was that 328? 395. Then we had 395, 477 credit, and then I went and bought it back for 458. So literally, made I mean, just barely a break even yesterday, but it was just a wild ride. But it was some income, kind of like the XSP today. Even though it was only a 50 cent, we made our 50% on that XSP calendar, because the cost of it was only 50 cents. The other ones are free trades. But anyways, yeah, that was a wild one. So SLV is the only one that I see right now in terms of the ETFs, liquid ETFs. Let's go to high options volume. I mean, like I said, it was definitely it was a wild ride, but it worked out. Let me see. Anything else? Look at X. Volatility's back up. I'm not going to get back into that because U.S. Steel is still kind of, there's a lot of issues going on with that company right now because of the workers are pissed off at Trump, and I'm just kind of like, I mean, I don't want to get in after the volatility. I want to get in when it's volatile, because it's very volatile right now. It's just it could get worse. With this new administration coming in, anything can happen. So if we're going to go in, I'm looking at the 5-day changes. It's all red. The only one, NEO, is the only one. I've never traded NEO, and I really don't care because I don't see anything happening on NEO. That's the stock that's going to zero. If you see, NEO's not really going to do anything. That's the anti-Tesla stock. ATR is off the roof, 60 cents. It can move either way. Volatility is starting to range a little bit, but I don't think we're going to get paid for getting in this for a risky trade. It can move $1.20. If we went out to February, there's nobody's trading this. Yeah, there's nothing here. I mean, 33 cents and 244, that's nothing. And 244 buying power, that's a joke. So anyway, anything. Let's see. Anyways, let's go. See, XLU, nope. I'm just looking at the 5-day change and looking at IV ranks. So NEO, Riot. Look at Riot, but Riot came down 8%. Wow. Charge Point Coin. That was one, but Coin came in 2%. Even though it's still kind of volatile, Coin is just out there. I mean, yeah, that's been nuts. Yet it is kind of ranging in that high range, but look at that. Volatility just came in and got sucked out. And I don't like getting into stuff like that. If you look at the red and green line, I like it when it's higher, much higher, because it could easily get back up there and that'll cost you a lot of money. You get in thinking you sold the high volatility and it only gets worse. Next Gen Energy, I've never traded that. Yeah, that's a zero stock. It's going to zero. Next Gen Energy, yeah, there's nothing here. Yeah, that's not even, literally no options. Let's see what else we got. Okay. Hood, Robinhood. Does Robinhood have earnings? Does it have earnings? Oops. Let's take a look at Hood. No earnings. Okay. So, but we'll look at the options strikes to see if there's any major earning. Okay, so Hood and CVS. Now here's the kicker on CVS. I wonder what's going on with CVS. Why? Because Walgreens is going out of business. So that should give a boost to CVS. So let's see if Hood, if there's anything that could be traded. Let's go out to February. Don't see any earnings. No spike in volatility. So there's no real earnings coming in. If there's a major spike, then we would know. Looks like February, maybe. There's a spike up there, but not, well, it's kind of up there. So it might be February. Who knows? Anyways, let's go to let's go to 17 deltas. Oh man, look at that to the upside. Wow. So 216 out of 764. We're still not getting paid enough for this. Yeah, not getting paid enough. If we condored it, let's see if we were the Iron Condor. And there's not a lot of room to move on the Iron Condor. So when I say move, remember, anytime you do a trade, know that you're going to be ended up adjusting. That's just the nature of trading. You automatically know you're going to adjust. 141 at a 359. Let's see. So 141, the width of the strikes is $5. Only 141. Buying power effect, 359. Nah, it's $5. I would like at least 166 in this. 180 would be even better. It's not enough. Anyways, let's go to what else? There was something else up there. Look at UNG, man. Volatility still high, but it came in 23%. That would have been a nice one. UNG, let's see what else was up there. CVS was the other one I'm looking at. CVS. HUT is still just ridiculous, but I never traded that. I don't know about HUT. So we got CVS. Let's see if there's something there. Let's go out. Okay. No major spikes and vols. Yeah, there's nothing there. If we went out to, say, 23 deltas, let's go 18 deltas. See if we can get something around there. 16, 18. All right. Around the standard deviation. 162 out of 531. Nope. We're not getting paid enough because we've got 45 to 62. Okay. So that's 17 right there. We're only getting 1/10 of the strike width, and only one of the buying power. We're getting less than a third. So there's nothing there. I really want more buying power effect. If I could get 30% more, then I'll look at it. But we're not getting that. Let's see what else. XRT looks. Where's XRT? That looks doable. Looks like a condor. Let's see if there's anything there. XRT, let's go out. Man, March is a long ways away. It's 100 days. That's way long out there. We'd have to hold on to that thing. There's probably no strikes here. There's nothing there. We went out to the 44 days of January. There's nothing there either. There's nobody's trading it. No trades. Yeah. But I'll keep that on the radar because there's no volume on that one. See if there's any contracts being held, any open interest. See if there's any contracts being held. Yeah, there's no contract, barely any contracts. Nobody even cares about that month. Okay, it is what it is. Let's go to KRE, just barely making the IV index. KRE, Devon Energy, barely making it. I think I traded Devon before as a strangle. There might be some butterfly trades. but I can't find the volatility on some of these. When I say butterfly, I'm talking, I'm looking at, just income butterflies. You could do like a double ratio or double butterfly, stuff like that. So if we go out 44 days, of course, you're not going to find anything here. There's nothing. If we go out further in 44 days, let's go to February. Nothing. There's nobody trading this. Okay, so Devon Energy is out. Okay, KRE. Look at Beyond Meat, man. Beyond Meat is ridiculous. Before we go to KRE, let's go to Beyond Meat. What's going on with that? Yeah, it's going to zero. Remember that? All that hype? Beyond Meat. Look at the volatility. It's ranging. Beyond Meat is going to zero. Let's see. SMCI, man. That trade. Oh my goodness. Woo. That was a scary one. So let's see if there's anything in Beyond Meat that we could deal with. Let's go to February. Nah, there's nothing here. I mean, there's a little bit of trading going on, but nah. Okay, because there's no room to move strikes on a $4 on a $4. Look at it, bid ask 1531. There's nothing here. If we went to Beyond Meat, and that's just going at, let's see, that's just going at that delta, 21 delta. There's nothing even on these 21 deltas. 52 out of two, no, because we've got a $4 and we're only getting 52 cents and $4. That's, I mean, about 10% of the width of that, and we're only getting a quarter of the buying power. So nah, that's not worth it. But look at that vols. I mean, the index is 104. I mean, if we did this, could we do this any other way? No, 57. No, because if we're moving strikes, we're only getting 3 cents on these strikes. Yeah, there's nothing there. Nothing. I'm just looking at it going, man, this, I mean, the risk to the downside, because again, I think this thing is going to zero. But it could shoot to the moon. And even if it does, you're only getting 34 cents and two, you do have a 70%, 78% chance of making 15 cents, 15 bucks. But, I mean, is it worth it? Really, is it that? It's not worth it. Let's see what else we got. EEM, SMCI. Let's see, EDR. I've never traded that. Baidu. Baidu is one that's in the possible strangle zone. Go to February. There's nothing. Look again, nothing. No contracts. No contracts. Look, 17 delta, nothing on these. Look at the bid-ask spreads are just ridiculously ridiculous. 274. So you've got a 25, 95. You've got a $30. So you're getting a 10%, less than 10% the width of the spread, and you're only getting like a quarter, not even a quarter, less than 10% of about 8% of the buying power. So no, that's not worth it. Because that means that chances are, even if I wanted to do this as a condor, I'm not going to get it. Because I would have to get at least 166, and you're not getting it. You're not getting a third of the buying power, or you're not getting a third of the width of the strikes. So that's not going to happen. But there's another way to probably trade Baidu, because there's a lot of, let's check this out. See if we could just sell puts in this. Let's take a look at where it's been. Look at that. Nope, I will not sell puts when the market goes up like that and then crashes. Even though volatility is high, relatively speaking, the index is high, but relatively speaking, in the last year, volatility has been coming in. This thing can move easily $6. Easily move $6. So let's see. what could be done on Baidu. If it can move $6. Let's see. I don't like see, there's nothing there in terms of strikes. I was looking to see on selling puts or something. On the February, there's nothing there. And I don't want to do any of these weeklies because chances are there's nothing on Baidu. Okay. No volume. Volume is king. Let's see. Look at Rig, man. Rig, that one's going to zero. I think I have shares of Rig that I had for, over 2 decades. 3? I can't remember. But look at that. Rig is going to zero. Nothing. In terms of volume, volatility, nothing. You could try to sell puts. 6 cents. No, there's nothing here. Yeah, this is a dead stock. A lot of volatility, but it's not worth it. So let's go to, okay, I think I tried GDX, but GDXJ looks okay. I've traded that before. GDXJ and KWeb. KWeb's just like FXI, but you know something. Yeah, I think that's the Chinese. Yeah, that's Chinese. Let's see if there's any strangles in KWeb. We're not going to go 37 days. Let's go out further. There's no volume really. Let's go outside. Let's go to that. Okay. We'll go outside the standard deviation. Where's KWeb been? Same thing with FXI. It's pulling in. Volatility is a little higher. This thing can move $2 a day. It's like a safer version of FXI, but you're only getting $1.06. And that's the 17 deltas. 17, you're only getting like $1 less than and that's what that's the $10. You're getting 10% of the spread, and less than 1/7 of the buying power. So that's not worth it. Not worth it. I mean, there's a trade there. It's just that for this strategy, there's no trade. If we looked at selling puts on it, we sold the 17 delta, and we'd sell that for 45. If we sold the 17 delta over here, so there's some upside skew, that's 51. So if we were to do this, okay, there's a way to do this thinking that this thing can fall. We went 17 deltas, 2-to-1 butterfly maybe. So if we went 17, 37, for the 37, 39 and 4, 43. Oops, let's buy this. Butterfly. I would do a ratio spread, but that's a little costly. So if we butterflied, okay, that's a 3-cent credit on 197. So we're not getting paid yet. So let's move these strikes in. And if we can get more credit, still not there. Okay, this means there's a 66% chance that this thing will get touched. 48% chance, so that's like a 50-50. And that's a 2. This is basically a 2-to-1. Yeah, again, there's no credit. There's really no credit on this trade. We brought it in a little bit. Are we getting any credit? No credit for this trade. This is really nothing. Nothing, because I wouldn't do this for 5 cents of credit. Because there's a 34% chance that you'll be outside of this. Gamma came in a little bit on you, even though it's saying that you got a 91% chance of making that, or it's 86% chance of making $5. It's not worth it for the credit. I know it's only a $31 stock, but only getting 5 cents to lose 95. It's not really If I were moving strikes around and wanted to make it a free trade, and then and got into that as a free trade, I would do it, but that's not worth it. GDX, one of my favorites. I've been trading that all year, back and forth, doing good, getting busted up, doing good, getting beat up. So 37 days. If I went out to March, there's nothing there. 15 deltas, that's around the standard deviation. There's nothing. There's no volume. Okay, so 143 at 377 buying power, 34 to 46. We'll say $12 spread. We're getting a little bit over 10% of the spread, but at least we're getting damn near half the buying power. A little less than half, like 40 some percent of the buying power. If we did GDX, Gamma's going to hurt us a little bit. Because remember, GDX can move. It can move $2 a day. That means we'd lose $16 on this. That this thing can move easily $2 easily a day, because Gamma for each point is $8. Theta, we're getting $1. We're getting $2 a day, so that cuts it down to $6. We're pretty much delta neutral. So if there's any more volume coming in on this, if I see any traders come in, I may do this. But right now, there's nothing. There's nothing here. It had to be screaming volume. I'm sure there's some strikes out there in GDX that could, you know what? Let's try something. We'll get a little dangerous and see what happens in 37 days. I never really go 37 days, because anything under 40 days and you're looking at Gamma hurting you. But if we went out, say our standard 16 delta, okay, we'd be getting 68 on 369. It's not worth it. 35 strike. Let's see. So we're going to 35 to 43. So that's $8. We're getting less than 10%. And we're getting much less in the buying power, so it's not worth it. And Gamma's 12, so we'd be losing $12 a Gamma, even though we're getting $3 back. So we're losing $9. Because this thing can move, and that's $12. Even though this thing can move $2 a day, we'd be losing $24. If it moved $2, we'd be losing $24 either way, and only getting 3 of that 24 back. Probability of profit and everything else is down. Of course, January 17th, the Gamma is going to be higher. So it's not worth it. But the SLV trade, so that's the only one I could see getting in. We rolled the Intel. We rolled that, even our deltas. SLV, I'm just going on the higher end. So you know what? Let's replace this. Yeah, I want to replace that order. Why do I want to replace it? Because the higher and more the cost gets, the more and more I'm trying to just see if the market will come to me. So other than that, but that X trade, man, other than that, let's look at what would have happened had I stayed in the SMCI. I always like to know what would have happened. SMCI, if I didn't stick to my rules. I mean, the strangle we had, the initial strangle was 233. So it was a 1535 strangle. And so the thing of that, when I bought it back for 838 just to get out of there, because it was just getting out of hand. If I bought it back today, it would cost me $11.59. At one point, it was even up to like 16 or something ridiculous. It would have been double the price to buy it back. It would have been it would have been a nightmare to buy it back. So getting out of that trade was the wisest thing to do. Okay, so we got SLV. That got filled. So, okay, market came to me. SLV. Let's go to positions. So we got that. We got filled that. We got filled in that. Yeah, I guess Christmas trading might be a little thin. And what do we got that? Okay, we're way out into February on SLV. Okay, I'm not mad. Let's see what we got on our deltas. Yeah, so 16 delta, 15 delta, 16 delta. I'm not gonna cry. I'm not gonna really cry. SLV. Let me just do that. What we just did. Let's just take a look at that similar order. Yeah, I mean, it's not the best of trades because out of it's like $8. I'm still only getting 10% of that, but I'm at least getting a little bit. I'm getting a little less than a third of the buying power. I mean, just even though it's a little less than a third, I'm not going to really cry. It's just this is a trade that I'm just going to go ahead. Getting I mean, the gamma is the thing that's killing us because this thing can move, but or it'll cost you more because it moves. But the good thing is I mean, even though that you might for each dollar you're losing, but this thing can only move at the very most $1.20. So you would lose that $12. You get back 2 of it on theta. So I mean, it's not the greatest of trades. But if this thing should start to fall, you should see volatility come in a little bit. Volatility, the only thing is I don't like about this is volatility is the IV index. The IV rank is I mean, IV rank is not the greatest. But the thing is, an SLV, we still have that IV index at 30%. I mean, that's just kind of like we're at the very low. The thing is implied volatility has been going up. So we'll see if it does come in a little bit. I just don't like the fact that it's all the way down here. I like it when it's up here, but it's come in a little bit. And maybe we could stay in this till the end of the year. And see, just get some theta out of this and just get out of the trade. Get out and, just get a few bucks and get out. We'll see what happens there. Outside of that, inventory wise, the marijuana stocks, I don't care. Those are very cheap, cheap. Like I didn't really care about it anyways. EEM, oh no, I got out of that one. That one came out pretty good. That was the calendar trade. Let's see, where's SPX to see? Let's see, VIX. Let's go to VIX. Yeah, so we could do some more calendars. Yeah, we can do another calendar trade coming in. Let's see what we got on our. I mean, yes. So S&P is over 6,000 again, which means that yes, it is definitely sellable in terms of there's possibility that these things will get you some volatility. But again, you got the so-called Santa Claus rally. I seriously don't think that their administration that's in there is really hell-bent on trying to make markets go up because they're a lame duck. Chances are this thing's going to pull back nicely. So if we go to and do the same thing as before, XSP, buy a calendar trade, again, the same thing, go out, see, this Friday is what? This Friday is, let's see, what is this Friday? Today is 11, see, 13th. So 13th. What is this Friday? Today's Wednesday, 11, 12, 13. So the 13th. So that would be the 20th. So if we sold the 20th, and I think that this thing could go down, all I needed to do is touch. I don't care. As long as it touches, we're okay. I think that it could get down to like the 60, say around these deltas right here. Let's see. This has 8. It can move $8 either way between now and December 20th. They're saying that this thing could be up or down $8. If that's the case, We're at 607. That means around 600. That's your expected move. 600, 599 actually. But I want to go inside of that. So if I were to do this, since this market has been bullish to the upside like crazy, I wouldn't mind doing call calendars. Even though I know that we're looking at this going down, like I did before, I went up to the call calendar. And I would do the same thing up here, saying that, hey, if it goes down, you're going to get volatility in your favor. If it goes up, it won't go up and hurt you too much. So I would go up since $8. This thing between now and then, it's at 607. They're saying that this thing could get to 615. I'll say that half the distance, I would say possibility, saying around the 611. That this thing, let's see, the 611, that gives us a 80% chance this thing will get touched at 611. The call calendar that goes up there. And there's more skew to the upside. So there's definitely thinking that this thing can go up. So if I did the 610, this is definitely, 610. And then that's December 20th. And then let's go to the 20th, 23rd, 24th. And if we bought the 610 on the 24th, that's 48 cents. We're getting paid $4 a day. Gamma, I don't care about the gamma on this. We're not really selling, we're just buying. So we are long a little deltas, of course. 45 cents. Since we're buying this, let's see if we could buy it a little cheaper. We'll say 43 cents. And if this thing moves down, that should give us a little bit of a room. Should this thing start moving down on us, that when that moves down, volatility goes up a little bit. So let's analyze this. So I don't mind doing this. Oops. Analyze this bad boy. So if the market moves down and it gets to 604, let's see, it's at 607. See if it gets at 604. And let's see what would happen if it just fell to 604. We'd be down about $9. Okay, about 10%. But as it falls, volatility goes up. So if it goes up 1%, then we'd be down $1. And that's only 1% increase in volatility. Okay, so, and let's give it a couple of days. Let's see, volatility goes up 1%. So, I mean, we'd be up like, a quarter, not even a quarter, 1/8, excuse me, 1/8. So, I mean, hey, it is what it is. So, if we could get this in there for 43 cents, why not? We are kind of a little strained in terms of the, we are going toward the downside of this. We are kind of down close to that break even, which is cool. It's theoretical. I shouldn't say, because it's a calendar, so you can't really tell what break evens are because volatilities are different. But we're going to see if this thing will get us in there at 42 cents. And we'll see if they will let us do this. 42 cents. So there we go. So we got a few trades filled. We got SLV filled. We got Intel. Evened up our deltas a little bit on that. And we got a calendar coming in with XSP to see if markets will fall. Other than that, that should be cool. Okay, Brother Will, if you get this. So we got got 3 trades on today, and we'll see what happens. Hotep.